this time. But one stock which is in focus today is Infosys. This after there's a Morgan Stanley note when they met the management. Rima, yesterday we were talking about EPAM cutting its guidance after its earnings and then cutting it again. Looks like that's at least, not the case, and the uncertainties perhaps factored in.
I think the street was worried that will the IT companies also resort to cutting guidances as the year progresses. So which is why Morgan Stanley meeting the top management of Infosys and what they have to say holds relevance after what we had yesterday. Well, the key takeaway from the top management of Infosys is that the external environment has not changed much, which basically means it's not deteriorated, but it's not improved as well. Now, the guidance given by Infosys for this year was 4 to 6%. And this is what Morgan Stanley gleaned post that. They're saying the company appears to be confident to achieve the lower end of the guidance, which is 4%. That's already been factored in. Perhaps they already have the deals which give them 4% revenue growth. So they appear to be comfortable to achieve the midpoint of the guidance. So 4%, very confident, likely 5%, but the 6%, that's the top end of the revenue guidance, appears to be a bit challenging because it would require a faster pace of closure of some of the mega deals in its pipeline. Also, the company says that improving margins in FY24 could be a tall task, given that levers like utilization, employee bandwidth, they're best flexed when there is a revenue growth, when there is operating leverage. So improving margins in FY24 appear to be a bit difficult. Their key takeaway is that unlike global peer EPAM, the Infosys management commentary was more balanced on demand outlook, perhaps because Infi also gets a lot of cost takeout deals, cost optimization deals. But any expectations of back-ended growth for the industry should be fraught with risk, which means that if you are anticipating that the revenue growth is going to be met while the company is growing fast in H2, well, that is risky, right? That's the assumption right now, but it may not play out. But as of now, Morgan has come away saying that consensus expectations of a 5.5% top-line growth appear to be reasonable. So it looks like it could be met as things currently stand, but the situation is so fluid, right? So you need to wait and watch how the demand scenario plays out. As of now, it's not worsened. Doesn't look like it's improved as well.
All right, let's stick with IT. Rima,